screen.
What you want me to share? I've got the big one chart. No, I'm not gonna. I'm not gonna try it. I'm not shorting, so I'm not gonna share it.
Keep hustling.
Yes, this is we interrupt our normal way of opening the thing because, yeah, shit's hit the fan, literally. And yeah, I think today we just need to get real a little bit and discuss a few things before we start going into too much trading. I want to say hi to each and every one of you guys, and this is a tough one. I mean, I thought about this a lot of what I'm going to say to you guys today, and trying to bring it into a perspective so you guys can see it from the way that we look at our trades in such, and the way we look at our buys. And when we use these terms of buying the fear, who's buying the fear with me? And then you have people rallying on you on Twitter saying, yes, I'm buying the fear with you. But the reality is somewhere along the line, there's somebody selling the fear because of something that's really impacting him, or selling the fear because of a bad decision. Regardless, it's the in the moment emotion that is creating the opportunity. So today's in the moment emotion is predominantly known as something really bad. And there's no taking away from that. You know, our hearts go out to anybody impacted in that, both sides, because we know that the general public, everybody involved there doing the fighting, doing the dirty work, are pretty much pawns. And the real reasons and the real movements behind that is normally blinded the true truths out there. But not to start becoming like a conspiracy junkie. I am not knowledgeable in this space. So I want to do it justice by keeping my mouth shut further on this and using today as a good time to teach you guys about buying the fear, the emotions that drive these opportunities, and how we should conduct ourselves. Lee, my friend, let's get going. So yeah, let's just say something else. I'm Rudo, known as the Chart Artist, so you can go and find me on Twitter. We have got our official links pinned in the description, and my trade buddy co-host is Fibonacci Lee. So a very somber start to this stream today. And okay, let's have a look at Bitcoin. So I started with a tweet. I'm going to bring up my screen, and I will move this in a little bit bigger so that you guys can see. Okay, so started with this tweet last night before I went to bed. I said, listen, this is still the buy area. We didn't make the higher high. This was that little line there. I can probably zoom in on the image for you guys. So there's the higher high level. That's my invalidation. Simple. We don't need to overthink that, because normally markets that want to start going up starts going up. Case in point. And the idea is that this buy zone is still in play. Now, we use this buy zone a lot. We use this strategy a lot. Think of it as a typical play within a poker hand as such. Okay, so we looked through area, and then obviously the rest is history. Price wicked into that zone. But price wicked in that zone, and it was to an expense for something that we don't really like. Now, trading in general, guys, has got some bad connotations behind it, and rightfully so. And what do we mean by that? I don't want to press that button. Lee, where you at, buddy? You're back. Trading in general has it. There's sayings like the Wall Street would say, the bears make money, the bulls make money, and the pigs get slaughtered. There's buy when there's blood on the streets. There's a lot of these sayings, and in normal times, we tend to quote these things and laugh about these things and get desensitized on these things. And I think today is a good reminder of, you know, that there is the behind. There's stuff happening behind when these things play out. So it doesn't change our job at hand. Our job at hand is to buy these bloody streets. And our job at hand is to take profit when, you know, everybody is celebrating how smart they are. And we've done this on our stream, and I think we've done this successfully. So this being said, let's have a look at where we are going with our current trading and our current mindset. Now, these big events they can set us up to create perspective of what really happens out there. Now, when we talk about buying the fear, the target is there, and sometimes the news, be it horrible, creates the necessary impact for us to get to the target. So it means that TA does have a home. TA has a reason. So when we bring up our TA chart, just want to put it in perspective. Lee, a country went to war with another country, and this created Bitcoin to fall 11%. Now, if we look at the previous dumps, no country went to war at that stage. None of this happened, and this created a 30% retrace for those few days. And to put it in perspective, that although these news events can be horrible, it always gives us the excuse to take action. So if you're feeling uncomfortable buying today, purely because the way that we might look at this long term means that this is something that might not end tomorrow or end next week or end year. The reality is that the risk, whether it was a small thing that created a nervous reaction in the market or a big thing, when we take action, the risk is always there. And that's why we do use TA to manage that risk. So with this being said, not to try and set a mood that you should trade differently today, and or trying to set a mood that you should trade differently today. And that's the reality. So we should use today and do today the same as any other day. Analysis fail, buy zones get lost, and stop limits get hit. And buy zones get triggered, profit gets made, and so forth. So to that point, that normal business, not trying to be unsensitive to what's happening outside, we now need to press on. So I'm going to bring up my DXY chart. The DXY chart basically is the way that we look at what the world, what the US dollar is actually doing towards what is happening outside. And we made our tile for today was, how war can impact crypto. So now let's answer that in a sense. At the moment, with all the unrest, all that has changed for us on this channel is that it moved price closer to our target of where we believe that enough stress will happen on the other end to force price to our favor. What do we mean by that? Well, let's quickly take stock. The Fed has got a problem. Inflation. Inflation's running rampant. Everybody's unhappy with it. So the Fed said, okay, we need to change that by increasing interest rates. Interest rate will punish people that are living on credit, making loans or spend, by making it more expensive for them, and so forth, hopefully calm down the economy. When the economy calms down, inflation goes down. The simplest way to explain it is, say you're a lawyer. If you're brilliant at your job, you get to charge more. Only when you don't have a full book of clients booked. Simple. As soon as there's a queue of people wanting to use you, you're allowed to push up your price, theoretically, because you're in demand. Now, bringing down the economy is the same as like doing something, hiring 20 more lawyers and moving them into the same business so that that pristine lawyer that's doing well basically gets forced to bring down his price, because everybody that can't afford him now will look at the competition and say, well, I'm getting a great deal. I might not be working with him. I'm going to go the other way. That's what they're trying to do. Now, Russia's prepared for this. And they're actually calling the Fed and the US government's bluff. How they're doing that is by saying, okay, we've got a treasure chest. We've got gas reserves and we've got all these other things. You've already sanctioned us. We're prepared for that. But we've got a treasure chest. We are holding your currencies. We've got a lot of different currencies. They've got the US, they've got the euro, they've got the pound, they've even got their gold, and they've got a very strong Bitcoin mining community. So they have prepared for this. They've built an economy that can function self-sufficiently. And they've got a friend of an enemy of my enemy is a friend in China that's also pissed off with the US, that's converting from coal to gas. So from their point of view, say Europe stop using their gas or they price themselves out of the market because for some reason, or sanctions get hit on them and so forth, they've got China now as a possible ally to help them and keep their economy going. Now, what does this mean? Well, if I want to, the Fed wants to bring down my economy, I want that lawyer to drop his price, and I'm hiring or training additional lawyers and moving them into the building. If that is the goal, and the goal is now to do that, what would the US be doing? Well, the US is now going to stop giving free money out. They're going to stop incentivizing people to take loans. So what's going to happen now is the market's going to cool down. That lawyer is going to drop his price. But guess what? What the Russian government is doing is they're creating panic within resources, gold, gas, oil, all those things. So while we are expecting what we're doing, the US Fed is expecting what they're doing is going to calm down the economy. It's invertibly, oh, now my tongue is running, creating the opposite effect. It's warming up the economy. Why? Because people are rushing in, getting goods, getting trades because of what is worse, a bigger evil, this evil of war. So it puts the Fed in a unique position. They want to raise the interest rates. They want to bring the markets down. They want to cool everything down to get inflation sorted. But with this and the way that this is playing out, they might have to go back on their goal and say, what is an even bigger evil? And that is the oil price going up, which is going to make inflation even more. And what we are trying to do is probably not going to help, because come wartime, what would you prefer? A dwindling economy or an economy growing stronger, so that when we want to tax our economy, when we want to take some of their fiat to fund what could possibly be a war effect, there is an economy to tax. So I just want to leave that with you. And with that picture, that is kind of what the DXY is pointing to us. Maybe they are in a process of getting to that point where they're going to cash in, or they're going to have to cash in. And what that's going to do long term, it's going to bring the value down from the dollar. If I know I'm going to get taxed heavily for holding dollars, I will leave my dollars alone or get out of my dollars, stop using my dollars. And if US and Russia keeps fighting their way and Russia decides to stop using the dollar, that's going to be more incentive for other countries, not strategically aligned with US to their own personal benefits, to rethink the way that they do business as well. And that might hurt the dollar further. And this brings us to the positive note of where we are within Bitcoin. So I am sorry for, rest in peace crypto and all these negative things. But I mean, it's stuff we have to think about. But it brings in the positivity for what can possibly be. And the positivity is, if we look at this is 2013. What did we see when we broke past the previous all-time high? Price hovered in that range for an extended period of time. The market rhymes, never repeats. So you're not going to just copy those candles and paste it in today, basically, and say that's how it's going to play out. That's not what I'm saying we should do. But we should look at what happened. Within an accumulation range or a reaccumulation range, what you would find is a stress point. Now, that stress point, once that stress point gets hit, you would want to see increasing volume, powerful volume buying. Now it's setting up. If we can get to the stress point, take profit point on the dollar, that might turn the tide into our favor. It might get us to that stress point where we would want to be. This is where we are now, where when this buy sticks, because it's still risk. I've not moved my stop limit past where I've got it hidden below 32. Once that hits, I would want to see the volume supporting that. Then I know it's okay. Up until then, It's business as usual, risk as usual. We have to wait patiently for this to play out. So, with this being said, what happened after that? Well, after that played out, and I can maybe fast forward this incredibly, the market then runs onto these risk off assets because then Bitcoin's mind in everybody's is going to be a safe haven, not a risky thing. It went on discount. It's running away from me. And if this thing keeps on hurting me, as it is, the world economy, the war, the Fed, everything keeps on hurting, maybe I need to start getting in here. And this brings us back to that theory of the hyper adoption, where it takes one big player to say, I need 1% of my assets in crypto to make it needed to make the next big player look at that and say, maybe now I need 2% because I'm late. I'm not as well covered as him. And that's that hyper adoption. For that to happen, though, we need long-term sideways. And what have we experienced? We've been sideways now for almost a year. So for me at this stage, it's make or break time. It's time where we have to say, okay, there's blood on the streets, and maybe we need to think about buying that. But our stop limits are there because guess what? If you buy blood on the streets, make sure they stop shooting. Otherwise, you also will get shot. So that's why we're scared, and that's why we're negative, and that's why we haven't touched any alts realistically. Because for them, there's no sign that the shooting is over. They might bleed some more. And that is what I'm waiting for any of the alts. Okay, so with this being said, guys, I mean, that's a horrible day to be here, to be honest with you guys. I love each and every one of you for being here. And I have to say, hats off to each and every one of you guys. We've got a real stand-up family here. And but at the end of the day, trading is a game of loss and opportunity. And we just need to be respectful of that to that extent, but know that we are just as evil as anybody else in that sense, because every time you buy, there might be somebody selling to you at loss. And that's why it's important. We want to make sure that when we buy loss, that it's proper loss, so that when we get that time when everybody's greedy, we can take profit on that. So with all this cruelness out of the way, I think let's focus on more TA. Lee, my friend, you've been very quiet. You had a short last night after that tweet, basically, where we said, listen, it's not looking good. The buy zone is there, so you had a nice short, but now you're waiting for that entry, realistically, for a leverage. Remember, we've now got a spot, but spots worked out on daily. Leverage means we want to start looking at getting that risk lower and lower and lower, so that we can actually have more confidence in our buy, so much so that we'll be willing to borrow money and take the trade. And if we are wrong, we only walk away with the same amount of loss than we would have taken on spot. So looking at this chart, and I'm just going to bring up this chart quickly before Lee, do you have a chart ready for us today? We basically couldn't talk to each other before the stream started, so I'm asking it live. Do you have something for us there on your buys, or should I?
I've got the exact same chart that I did analysis yesterday.
Okay, cool. So we'll look at that now then, because I think it's worthwhile looking back at it, because yesterday's stream was a powerhouse, I have to say, buddy. And give us a 999. Yes, I've watched it. I mean, I was commenting in the comment section. Everybody was talking to me, Lee. So I mean, you've got all the evidence. Okay, so let's move on. Point and figure. This is imbalance. This is what I'm talking to you about when I talk about imbalance. The scary is if we lose this, there's no more imbalance. All that we have is price discovery. So we're going to have to then reassess our targets to the downside entries and so forth. It's going to change our dynamic. I see there's a lot of love coming through for you, Lee. So they really enjoyed your stream yesterday, buddy. Thanks a lot for stepping in while I couldn't be there. Okay, so now let's move on. This is the Bitcoin chart that we've been looking at. And what we were saying to you guys is when I drew out these lines, and excuse the mess. We can maybe delete this. So don't get overwhelmed by a ton of lines. Remember, all that the lines represent is only a mark of something that happened as a memory, as a little reminder, a sticky note. So what we did is we drew out our trend line based on the axis of how Bitcoin performs. And if we would remove this to another significant high over there, you can see how price then respects that movement in price. If I were to move this to a significant top, let's move this there to a significant top. Something is not working nicely here. I've got this handle keeps sticking. Let's flip to another chart, see if this goes away. Okay, cool. So now I'm going to move this to a significant top over there. If I do that, you can yet as well see how price honors the speed and the movement of the market. So it's very important that that line doesn't get shifted other than we will reproduce it somewhere else, because that is Bitcoin's heartbeat. So with that being said, what did we get the last time we were here? I'm going to zoom into this area over here. We got that stress point to where the fear caught up with the demand, and demand overpowered the fear in the market. If I use that line, that's going to be my new, I don't want to say trend line. Trend line is taking away. It's the speed and the movement and the heartbeat of Bitcoin. And as you can see, what we're getting now is we've got price honoring and rallying back to that level. And now we want to look at that and say, okay, right, time to go into smaller time frames to see a reason for us to go grab a buy. So with that being said, and I think this is where I want you to come in with your chart, Lee. We've had some structure. We still need to go back to that scary unknown zone there in order for us to even remotely say that this is maybe the end. Because like we said, TA does have an ability to fail. It's a risk management tool, not a I know what's going to happen next tool. Okay, Lee, so I'm going to bring up your chart, buddy, and talk us through what you've got currently marked up.
Okay, first of all, I just need to confirm, are you seeing my chart correctly without any color issue? Okay, cool.
No color issue from my side.
All right, so yesterday we identified the zone, and I mean, this morning I was talking to Rudo. As you know, I shorted this area. It was very uncomfortable short, like I said, the zone. And if we're coming back on the other side, we are, on the other chart, we have a blue line here, which is also a very, very uncomfortable long for me. So I've been through the stress yesterday of shorting this area. It did hit the TP. TP1 was here below those stops where we said there's stops here. So no, it was here below those stops. There were stops here. Price need to go back to this area. And then TP2, we closed the short yesterday at that level. So now it is a buy. It is a really uncomfortable zone to buy. Like Rudo says, on spot, it's perfect. You had your stop loss below 31,000 area. But my math and how I think about this is quite simple, because I'm not quite a spot trader. For me, spot is equal like a long-term investment. So if I take a trade in this area, in this zone, and I have to hide my stop, technically, if I look at 4-hour charts, you put your stop loss below those candles here, or even you hide it a little bit even further down below, you are risking 7-8% of your trading capital. Okay, so that's not my style. That does not suit my trading style. And so in order for me to have less risk and higher rewards, because for me, anyway, this zone is not an investment, is not a long-term zone. I want to invest on long-term at 28, below 28K, between 20 and 28,000, if we ever get in there. Anything above that level for me is just another trade. So my strategy for that is to go on a lower time frame and look at this structure. I know that we are in a good structure and good localization because of this imbalance. We have identified this zone before. So what I need to wait, I need to be patient. And now I want to see just a higher high. Price needs to, on that time frame, on that particular time frame, 15 minutes. If I'm trading this time frame, I need to see the price going up here. Change the momentum for me, because now on that move, the momentum was down, 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 down. Now I need a clear sign that we are changing momentum. We had already a bullish divergence here. Okay, now I want to see a higher high, change the market structure, higher high on those moves. Once I see a higher high, now I can say, okay, this zone was a good support. We did have a second condition, which is a higher high. Third condition, we have a, and now if the prices decide to do something like 1, 2, 3, or 1, 2, 3, 4, 5, even like this, and considering on a longer time frame, if this is the wave 1, I want to trade this wave 2, coming back, test above those resistance, and I want to catch this leg if ever we're going up from here. At that time, I've got one condition, again, change of momentum. Second condition, break the market structure. We are coming back bullish, And then third condition, the localization is still good. Okay, I'm gonna buy maybe a 35 if I'm trading this time frame, a 35 instead of 34. But right here, I will put my stop loss at this low, because I'm assuming that now this low is gonna hold, and that's only a 3% risk for bigger gain. So that's more my style. I like less risk, and I want a higher risk to reward ratio. So I just want to wait for a little bit more confirmation on this pattern here. So I'm pretty, yeah. So I will be patient. I just want to have more confirmation. Now the bears are attacking. The bull is in our camp. I just want to see if our defense strategy is strong enough to hold them. If not, then I will wait, and then they're gonna go. They're gonna go down, and it's gonna go much lower. Then, if I'm bullish, I just wait, and I repeat this kind of strategy, this kind of pattern, wherever this bleeding is gonna stop. I hope that makes sense.
The prognosis is we just need to spend some more. Oh, I don't want to do that. We just need to spend some more time in this area. And then once we have it, we can start looking at getting those little trades in and start getting a little bit more aggressive on this. I see a comment here, and I just want to end with this. And newbie here, I bought a lot of Bitcoin and alts at 46. Seriously in the red now. I should continue hodl, sell, intention to buy at low prices. Okay, right. The one thing I just want to say to anybody that's maybe in such a position, we do not know. I can say to you, yes, maybe sell everything now, and then it turns around and it runs. I am bullish. Yeah. Or I can say to you, wait, because even if we lose this, we'll bounce it the next time. But that bounce it would still probably be okay for me. But for you, it might be a completely different thing. So it's the tricky thing about what we do. It is very hard to give. We can't give advice. This is not financial advice, because we can only look into your life in that little sentence. And with that little sentence, I won't have enough information to even help you. So what we do is, I tell you what I'm doing. You need to take that, look at your portfolio, and make decisions based on that. That's all that I can do. I can purely share what I'm doing. And if I get wrong, that's the sad reality. It's going to spill over. So you have to be realistic and I want sober about this, because money is real, and once it's lost, it's hard to get back. Okay, Lee, I don't think we need to talk today to death. I mean, we said a lot of, today is a horrible day, and it's not a nice way to do a Thursday. And I was hoping it would be happy, bouncing. We got our buys and so forth, and making jokes. And I think the mood is very down at the stage.
Yeah.
And that's the reality of where we are. Big picture, I'm still optimistic. That's we're in an optimism wave. Big picture, there's still a lot to happen for us. And until the market goes and breaks my line drawn in the sand, I'm sticking with my analysis, and that's about that. So from my side, guys, I'm going to say goodbye. I really, I wish there's realistically. We've been on the side as well with stuff within our own country. There isn't words to say. So let's not. That's the whole thing. We know what the international news has shared about stuff that we've seen. There's always opinions and perceptions, and the reality is we will really never actually know why and how this really got to be there, other than the actions currently is unnecessarily, and loss of life is not necessary. It should not be necessary in cases like this. And I thought that us being in the 21st century, that we can move past this, but in the end of the day, it seems that we're not. And this is the thing about society. We can only move as fast as the slowest person in the chain. And that's kind of what's holding us back, I would imagine. So let's hope that can change for future generations to come. From my side, I'm going to say goodbye. Lee, you want to close it up?
Well, yeah, nothing much to say. Let's wait and see what's happening. I mean, unfortunately, we can't do anything from where we are.
So cheers, everybody.
And yeah, see you tomorrow.
Keep hustling.